Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly unexcited for today's video because Bitcoin just closed its weekly candle below the 50-week moving average. Therefore, we have to assume the top is in until proven otherwise. Now, I know a lot of you would prefer it if I would be like the other permabulls and just said everything is 100% fine and there's no chance price goes lower from here and we're headed to 200K soon. But I can't do that in good faith after saying that the 50-week moving average was my line in the sand and using it as the main reason why I have been macro bullish for the past 3 years since I launched the channel. Now, the good news is I do expect a shallow bear market because we never got a crazy mania phase and blow off top, and I see bear markets as a major accumulation opportunity, and that's where the real money is made in this asset class for people that stick around. But bear markets are a patience and survival game, so we don't want to ignore the facts right in front of us and pretend like this is 100% going to reverse immediately and head right back up to new highs in an up-only scenario. And this is why Monday's free weekly report was called the trend break, because this is a trend that Bitcoin has held for the past 3 years, so we can't just ignore the facts. And it's not surprising that a ton of investors are extremely fearful right now, especially because Bitcoin is now flat for 2025, which is pretty insane given everything that's happened this year. And so far, this has been the worst Q4 ever for Bitcoin in a post-halving year. We had a rough October, and so far it's been a pretty bad November. In 2021, we had an amazing October and then a rough November and pretty bad December. And in 2017, we had an amazing October and then an amazing November and then an amazing December. Man, I miss those days. And with the macro trend break, we have to assume that this Bitcoin cycle pattern is playing out in terms of the length of the cycle from bottom to top. And because of all of this fear surrounding recent price action and 4-year cycle concerns, we're seeing pretty big outflows out of crypto ETPs globally. And now it does seem like a lot of the most recent selling is coming from short-term holders who perhaps bought the dip too early and went all in above 100,000 and now can no longer take the downward price action. You can see that very clearly here in the hodlers net daily change for hodlers that have held under a month with this big spike to the downside, which is usually a sign of short-term capitulation. But because I have a longer term thesis for Bitcoin, I like to make my investing decisions based on how far it is from its 200-week moving average. I like to be taking profits in the expensive region, buying in the cheap region, and buying aggressively if we end up going back to the very cheap region. And it's always nice when the on-chain data agrees with what the TA is saying. If we take a look at the Bitcoin MVRV extreme deviation pricing bands, you can see that the fair value region is where we're currently trading. We have the cheap region coming in at about 75K, and then very cheap would be anything around 55K. But of course, these numbers are rising over time, so they could be higher once we reach them. And it's important to have a plan for each price level. And as for my plan and what I'm doing with my portfolio, I did deploy a small amount of cash on Monday morning because I can't help but buy a little bit when I see extreme fear and sentiment this bad. I do plan to slowly unwind my altcoin positions once we see a bounce and go into a more conservative portfolio to prepare for downside, but I'll continue to cover that as we get more price action and as we get more clarity as to what Bitcoin is going to do next. And as always, if you'd like to learn more about my portfolio automation system or mental models I use to navigate this market or common mistakes so many investors are making, you can check out the Crypto Enjoyers program and community in the video description. We're having a ton of conversations about what's going on in the market right now. But we are in an area in terms of both support and the most recent death cross that I would expect a bounce for Bitcoin. If we're still in a bull market, it would be a bounce to new highs, which is not my base case now that we're below the 50-week. But even in a bear market, you would expect a bounce before price rolls over. And that bounce is going to give us confirmation in terms of whether Bitcoin can recover some of these major levels and flip bullish, or if we should expect it to continue chopping lower. We also see Bitcoin futures flipping negative for the first time since March, so a lot of late shorts are piling into the market here, which usually creates, at the very least, a short-term reversal. We're also seeing a lot of capitulation out of the Bitcoin spot ETFs, bleeding nearly 1.1 billion, and we tend to see these big outflows near local bottoms because as these ETF holders sell, BlackRock is forced to sell that Bitcoin and puts downward pressure on price, and they tend to create the low, and then we see these major inflows at local tops as these investors pile in and create the local top but as of right now, I do expect a bottom in the very near future. It seems like the Bitcoin whales agree because they're switching back to accumulation for the first time in a while amid the extreme fear. You can see they were taking profits in July, reducing their exposure again in August, reducing their exposure again in September, and we've been in a downtrend in terms of number of entities with over 1,000 Bitcoin, but very recently it's seen a big spike up as they're now buying the dip. So we'll see what happens over the next few weeks, but Bitcoin is coming into a major area of support here with a major moving average, a previous consolidation, and I believe the yearly open is also around this area. So anybody who's bought Bitcoin this year is having their conviction tested, and I wouldn't be surprised if that's creating a lot of the capitulation we're seeing right now. It always amazes me how everybody focuses on the fundamentals and how amazing Bitcoin is and the limited supply and the supply crunch whenever prices are going up, but then that gets thrown out the window whenever prices start going down, and all of that gets forgotten. We also have Harvard University tripling their stake in BlackRock's Bitcoin ETF and now making it their largest ETF holding. So while so many investors are panic selling because of the 4-year cycle and they're going to try to buy back in at the bottom and time things perfectly, it seems like a lot of these institutions are taking a more longer term approach on Bitcoin. We also still have a crypto market structure bill in the pipeline, and it's likely going to be voted on next month, and I believe this will be a great long-term catalyst for the asset class. And we have the CBOE launching perpetual Bitcoin and Ethereum futures, and this is going to bring more transparency by having a lot more of the Bitcoin and Ethereum volume done on these transparent regulated exchanges instead of the offshore nonsense we've had to deal with over the past few years and all those huge liquidation cascades. As for MicroStrategy, it's also approaching an area where we expect a bounce here, which is a nice confluence for Bitcoin bouncing as well. We have its 200-week moving average. We have the 8-month consolidation range that MicroStrategy was in before it had that FOMO breakout. And that was the same exact consolidation area before the FOMO where MicroStrategy saw its bounce off the 200-week in the last cycle as well. Strategy continues to take more and more Bitcoin supply off the market, but again, these buys are so much smaller than what they used to be, so they're having way less of an impact on price. As for Bitcoin trading ranges, we're waiting to see whether Bitcoin can have a false breakdown and reclaim 91K, or if we're going to get a confirmed breakdown below it. We had our false breakout in October, which was a warning sign number 1. We had our range breakdown in late October, early November, which was warning number 2. And then with the close below the 50-week moving average, which is somewhere around 103K, I have to expect that the structure is broken and that we're going to enter a prolonged consolidation and accumulation period. And this is very similar to what we saw in 2021. You have false breakout, range breakdown, and then a break below the 50-week moving average, which I believe was somewhere around here. And then you went into the previous range and had a false breakdown into a bounce. Maybe we can see that false breakdown this week. We have a lot of economic data, and we have some really important earnings for the stock market with companies like Nvidia reporting earnings. So that could be a nice catalyst for Bitcoin to put its bounce in, but we're going to have to see where this weekly candle actually ends up closing. As for macro, the global liquidity index continues to chop sideways and do nothing like it has been for the past few months, so it's no surprise that Bitcoin is struggling. The Fed continues to be hawkish and the market continues to price out rate cuts, with the expectation for December still being a pause. And as always, Fed rate cut expectations being pushed back strengthens the US dollar because it means rates are going to remain higher for a little bit longer, and that puts downward pressure on global liquidity and risk assets. We know that quantitative tightening is going to be ending on December 1st, but we still don't know when QE is going to be beginning, and that time period between the end of QT and start of QE is something investors have to be prepared for, and the volatility that it can create. I still expect this global liquidity index macro breakout to continue once the Fed does go back to QE. We're seeing a pullback in global liquidity as of right now, but this is something we've seen plenty of times in the past, even going all the way back to 2016 and even 2018. So we do see these pullbacks in global liquidity sometimes. So we have to continue monitoring it very closely to see what's in store for Bitcoin. As for gold, it's continuing to consolidate here after the incredible rally it saw recently, and it seems like it's a cool off period before gold's next leg up, and it's pretty concerning how weak Bitcoin continues to look relative to gold in the short term. The S&P 500 also seems to be consolidating as well back to its 20-week moving average. We're going to see if that level is going to hold and lead to more continuation. Again, it's probably going to come down to the major earnings we have this week and the economic data. But as long as the S&P 500 maintains its structure, I'm not that concerned about a huge correction for the S&P 500 quite yet. Hopefully what we're seeing with Bitcoin right now isn't a warning sign of what's to come for the S&P 500. We want to see the S&P 500 recover and give Bitcoin that backdrop it needs for a bounce into a lower high before perhaps rolling over. But again, it's going to come down to the earning reports and economic data releases the market is eagerly waiting for. We know that real GDP has been positive and we expect it to remain positive because of all the AI capex build out. We know the unemployment rate has been slowly increasing, but we haven't gotten an update in a while and the market is going to be watching those updates very closely. We're not seeing any major warning signs in initial jobless claims quite yet or in continuing jobless claims, so I don't expect a major spike in the unemployment rate here. As for inflation, we haven't received an update for that in a while either, and we need to see if core PCE is going to keep increasing and push back rate cut expectations even further, or if it can start heading down and give the market some optimism. As for Ethereum, it just fell to a 4-month low and is now under 3K, and I think this picture is a great representation of how both Ethereum and Ethereum investors are feeling, with Ethereum very clearly being tired, boss. Ethereum had its deviation above the all-time high and then lost its range high and its range mid, and it's now coming into its last major support level where we have the range low, we have a major consolidation and the 200-week moving average. So this is the area I would expect a major bounce, and we'll then find out if it's going to bounce into a lower high or not, depending on what Bitcoin does. Tom Lee is still calling for an Ethereum supercycle, saying that Ethereum is set to 100x in the next few years, so good luck with that. And we continue to see ETF outflows on these Ethereum spot ETFs alongside Bitcoin, which isn't that surprising since Bitcoin drives the market. Ethereum Bitcoin continues to look surprisingly strong though, so I'm not selling all of my Ethereum and running for the hills right now like I did in December of 2021 when it was so much more overvalued against Bitcoin. As for altcoins, they still continue to struggle with the altcoin season index sitting at a 41, and that is not surprising when the Russell 2000 continues to have false breakout after false breakout, showing us that investor risk appetite is just not where it needs to be for small cap stocks and altcoins to outperform. And because of that lack of risk appetite, Solana continues to head lower alongside Bitcoin and Ethereum, even though it's seeing ETF inflows during all of this madness. This is the chain with the highest DEX volume and by far the most active addresses and transactions, even if we want to assume some of it is bot transactions. But as long as Bitcoin looks weak, altcoins are going to struggle to do anything, so it's no surprise that Solana is struggling. Solana is down 45%, Ethereum is down 5%, and Bitcoin is down 1% over the past 12 months, which is really not great compared to what less risky assets like the S&P 500 and NASDAQ did. But as we look forward, the federal government is still running huge deficits. That trend seems to be worsening year after year. Exponential debt growth results in exponential money supply growth as the currency gets debased, even though there can be bear markets along the way. And that debasing of the fiat currency is a strong tailwind for risk assets that we price in fiat currency, like the S&P 500, and fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.